Okay, so in today's video we are going to continue with our cash budget. So in today's lesson we are going to do another question paper which contain a cash budget as well as debtors collection schedule. Okay, so let's look at the required part so that we can start with our transaction. Okay, required number one, they said you are provided with the information related to Matlodi traders. Their financial year end is on 31 December 2023. Okay, and the business is owned by Mpochavalal. Required 4.2.1 complete the debtors collection schedule for the month of January and February. So under debtors collection schedule, some of the figures, as you can see, they were already provided. However, I'm going to explain how they calculated all these figures. Okay, then 4.2.2 calculate the missing amount indicated by letter A to I in the cash budget for January and February. As you can see, we've been given the letter. So this is the format of cash budget. You have to know it. We start with cash receipts and you list all income and cash payment. So please remember that in terms of cash budget, we only include cash item. We don't have to see depreciation and bad debts here. They are not cash. We only include cash. Okay, so we are going to calculate all those figures here. So at the end of this lesson, I think this part is contained 21 marks that we are going to cover. So budget is very simple chapter that you are going to learn in this channel. So let's continue. So let's check information number A. Extract from cash budget for the period of January and February 2024. So they give us a cash receipt, the same as this one. Okay, so they give us a cash sales, a collection from debtors, a rent income, a cash payment. They give us a cash purchase, payment to creditors, under expense, loan, and so on and so on. So in order for us to calculate those figures, we have to read information. What are they saying about these figures so that we can be able to calculate it? Okay, so let's go to instruction. So we have Roman figure number 2 up to 7 or 8. However, I want us to start with the first part of debtors collection, which the information we are going to get it under Roman figure number 6 and 7. Okay, number 6, they said the sales and purchase, and they give us the table. So this table is for sales and for purchase. You have to be careful when we talk about a debtors collection. We focus on credit sales, okay, which means that we're gonna get it under what? Under sales. Okay, they give us months of November, December, January, and February. Remember what I said on the previous video when we were preparing a collection schedule. I said that this side you need to put all the months that you are given. Okay, we have been given from November up to February. That's what they did here. Okay, now let's read. They said the actual and the budgeted sales, credit sales, and they give us the amount. If you check in this case, they give us a credit sales, not total sales. If they give you a total sales, you must first calculate a credit sales, because what we put here is called a credit sales, not total purchase. Remember total sales contain cash and credit. What we are looking here is credit, which is collection from debtors. Collection from debtors is debtors collection schedule. Cash sales is a separate story, which means that we have to split them into different way because they are not recorded in the same column. Okay, now because in this case they already give us a credit sales, which means that it was just copy and paste. That's why this amount, they just list them as it is on the table, because they give us a credit sales. If they give you a total sales, you must calculate first. Okay, like what we did on the previous video. Okay, now let's check. They say the credit sales are 25%. If the credit sales are 25%, which means that the rest is cash. The rest is how many percent? 100 minus 25 equals to 75%, which means that 25%, 75% is cash and 25% is credit. Okay, now because we have this percentage, we can be able to calculate this cash sales, because we know that this cash sales is what? Is 75%. Firstly, because they give you for January, you must first prove for January before you calculate for February. How are you going to prove that? Very simple. January, you have been given amount of 168,000. But because you are looking for okay, let me rub here. Because you are looking for cash, you know that cash sales is how many percent? Is 75%. And remember, the total that you are given here is not a total sales, it's a credit sales, which means that you don't divide by 100, but you are going to divide by 25. The reason you divide by 25 is because this 25 match with what? With 168. You are not given a total. If you're given a total, yes, you can divide by 100. So if you do this calculation, it's gonna give you this 508. Let me prove it on my side, because I didn't calculate it, because I know it's correct. 168 multiplied by 75 over 25, then it's gonna give you 504, which means that when you go to February now, you're going to have full confidence that the formula that you are using is very correct. So you are going to say for February is 163,800 multiplied by, you are looking for cash sales over a credit sales, not total, as I said. So you're gonna get amount of, which means that number A, we can answer it. We're gonna get amount of 491,400, just like that. Very simple stuff. Okay, now we have to proceed with our collection schedule, because we already know those percentage, and these figures were given, we don't have a problem with it. Okay, now let's check the following information. Debtors are expected to pay as follow. Because we already have credit sales, now we can try to figure out these totals. So they said that, remember, debtors, there are people who purchase to us on credit, and we have to collect those cash in a different form. Okay, they said this business, this is how they collect it. They collect 50% in the transaction month. When they say transaction month, they simply say in the same month that the purchase has been made or the sales has been made. For example, if this sales was made in January, 50% is going to be collected in the same month of January. Then 30% in the following month, which is February, 15% March, after 2 months. That's how we do it. So let's do it in this case. So let's start with this month of December. Okay, maybe to make it more simpler, this side we call it months of sale. So this side is months that we are required to prepare. Okay, now to make it more simpler, let's pick up a January as a month of sales, like my example, January, which means that on the same month of January vs January, we're gonna collect 50%, and we calculate what? 5% discount. February and February, which is here, the one that we're doing is this one, January and January. February and February, we're gonna collect the same Feb and Feb is 50% and 5% discount. Okay, now let's calculate this first simple two, January vs January. Then we're gonna do the following month. Then after we're gonna do the 2 months. So if you do this calculation, let's start with January. Let's start with January. If you said January, the sales is 168, 1000, then we multiply by 50%, and we multiply by, remember they said there's a 5% discount, which means that we're gonna collect only 95. How do we get 95? 100 minus discount of 5% is gonna give you 95. Then if you do this calculation, you're going to get 79,800. Then it's a mark. Very simple. Then we're gonna do same procedure and just change the amount for February. 163,800. February vs February, where they meet. The box where they meet. January vs January, where the box meet. And you can also, okay, because we don't have a December here, we can't prove anything. All right, so let's calculate this one. If you calculate it, you're gonna get amount of 77,000 and 805. Then it's a mark. Very simple. Okay, now let's go to the months following the month. Months following the transaction sale of a sales. This is how we do it. We have to start December so that we won't waste the time, because here there is nothing. December, there is no December. December vs December is 50%. December and the following month, which is January, is 30%. If you say 172,500 multiplied by 30%, it's gonna give you this month. Then again, December, after 2 months is February. December, we're gonna have January and February. After 2 months, they say we're gonna collect 15%, which means that if you say 172 multiplied by 15%, is gonna give you 25,875. It's 172,500 multiplied by 15%. Then it's gonna give you this one. Why? Because it's after 2 months. After 2 months, guys, is you hold December, and they said, okay, here they said that transaction after they said 15% in the second month. Second month is after 2 months, which means that you count from January, December, you're gonna have January and February. Then you meet February here and calculate that 15%. Very simple. Okay, now let's hold January. January vs January is 50% in the same month, and we calculate it is this one. Then they said in the following month following January is February, which is here, and the following month is 30%, which means that we're gonna just say 168,000 multiplied by 30%, and we're gonna get amount of 50,400. Let's mark here and mark here. That's how we do it. Very simple. This thing is very simple. You have to get total, guys, when you write your September test. Okay, so now, because we are done here, there's nothing. Why nothing? A person who purchased in February, we can't collect it in the January. January is like old month. It's a previous month. We can't collect anything. Okay. Now we have to get total here and total here. Then here is gonna give you 157,200, and here 154 and 8. So these two balances, you're just gonna copy it under B and C. Very simple. Already, if you just transfer this amount, guys, you already have a chocolate mark. Even if you get something wrong here, 157,200 and 154 and 8, just like that. Now we are going to number D. We are done with this part. Very simple. Okay, number D is talking about rent income. Rent income, let's take Roman figure number 3. Rent will increase by 15% from February. January it was 45,000, and they say now it's gonna increase by 15%. You can just say 115 over 100, and you get straight answer. Or you do what your other teachers are doing, like they said 15%, and you get amount of I think you're gonna get 11,750, and you add it with 45,000. No, it's not 11,000. You can calculate it, but it's gonna give you the same answer. Okay, or let me just do it so that other student can learn in a different way. Multiply by 15%. You're gonna get 6,750. 16,000 plus 750 is gonna give you straight answer of where is it 51,750. But guys, if you just said 45,000 multiplied by 115 divided by 100 is gonna give you this straight answer. But if you said 15%, it's first gonna give you amount of 6,750, which you have to add it back with this one. So it's the same thing. Okay, as long as you give us full total here, because it has increased, this one must be above than this one. Okay, moving to the next one. The next one, we are going to number E. Maybe before we go to number E, guys, so for those who want to attend our extra class, now we have increased classes. We no longer have one class per week. Now we have 2 classes per week, and the cost is only 100 Rand for the whole month. Only 100 Rand per subject. So if you also interested in other subjects like mathematics, math literacy, business studies, and economics, we have all those subjects. You can also attend them so that you can pass everything that you want assistance for. So please make sure that you join as soon as possible our class, so that at least when you go to, now we are in term 3, guys, which means that automatically after term 3 you are going to write your final examination, which is going to determine whether you pass or you are going to repeat your grade. So please make sure that you join in time, talk with your parents so that they can also assist you guys for cash to pay classes, and you attend with others, and so that you at least, guys, the good part about the extra classes is that when you are part of the class, you will be able to ask us any question that you want assistance on WhatsApp. So that's for only those who are attending our extra classes, because we have different tutors who are assisting. Obviously we have to pay those people, so it can't be free. Okay, so now let's go to the second part now of cash budget. Actually, we are done with cash receipts. Now we are going to cash payment. Cash payment, the first part is cash purchase. Let's check the instruction about the purchases. Okay, if you check on the table, they give us a credit purchase. So now we have to check the information related to cash purchase. Where is it? This last Roman figure. The credit purchase are 60% of total sales. In other words, credit is 60%, which means that cash is 40%. It's similar with the one that we were doing, just that this one is purchase. It's us purchasing, it's not us selling. Okay, so now they also give us bullet number 2, which says creditors are paid 1 month after purchase. If we pay January, if we purchase on January, we're gonna pay them after 1 month, which is February. Okay, let's start with cash purchase. Cash purchase number E for February, which means that the one that we're going to pay for February, we took this goods on January. Okay, no, I'm referring to payment to creditors. Apology. Now we are doing number E, which is cash. Cash we pay the same month. So February, if you check, we have amount of 108,000. This is cash purchase. Cash purchase is immediate. You pay the same month. We have to take the one for February. Okay, but remember the one for February is credit purchase. So credit purchase is what we have. What we are looking for is cash. Cash is 40%. What we are looking for. And what do we have, which is matching with this one, is 60%. It's not 100%, guys. 100% is total purchase, the similar one that we were doing. Okay, so if you calculate here, you're gonna get amount of let me check, 72,000. 72,000, number E, correct. Then now let's go to payment to creditors, the one that I was doing before this one. Okay, let's read the transaction again. Creditors are paid 1 month after purchase and subject to 3% discount. Okay, now they're saying that if we purchase on January, we must pay February. If we purchase February, we're gonna pay the following month in March, which means that this goods is from January. This goods is from January. But remember, they say that there is a 3% discount. Okay, which means that we're gonna take that amount of 99,000 of January, because January we pay it on February. Multiply by, we're gonna say 97 over 100. Why 97? Because there's a 3% discount that we are given, which means that it's 100 minus 3 is give us 97. Then if you do this calculation, you are going to get amount of 96,000 and 30. Okay, just like that. Then it's mark here, it's mark here, and it's not just a mark, it's 2. Okay, now let's go to number G, sundry expense. Sundry expense, let's read number 5. Sundry expense increased by 1,500 every month, and we are given for February. So now, because we are doing a reverse of January, you're just gonna say 18,000 minus 1,500 before increase. We are doing a reverse because they are looking for previous month. So if you do that, you are going to get 16,500. 16,500, just like that. Then we have a loan. They make a repayment of loan of 30,000 in January. February they didn't do any repayment and nothing was required here. Then interest on loan, number H. Okay, if you check interest on loan, they say that a loan repayment will be made in 31 January. There it is, they record it. Then now we have to calculate interest on loan of 12%. How are we going to calculate this? Remember the loan that we have at the beginning, it was 150. If you check on top, 150,000 multiplied by, no, remember they make a payment of 30,000 because we are calculating for February. Then we must left with 120,000. Then after that we multiply by 12%. Because this 12% is for the whole year, is per annum, we must multiply by, we are looking for interest of 1 month of February, which means that we have to say 1 over 12. Okay, because it's for 1 month. It's not like when you prepare income statement where we are looking for the whole 12 months, because income statement we prepare for 12 months. This one we prepare for 1 month. We must do 1 over 12. Then it's gonna give us interest of 1,200. 1,200. Okay, the last one, salaries. Salaries, where is it? Salaries increased by 5% with effect from 1 February 2024. Okay, what are we going to do now? Because they say that this increased by 5%. Increased by 5%. Now we are looking for before increase. Because it's January. January is before increase. and they give us February, which was after increase, because it has increased on February. 126,000 multiplied by 100. 100% is before increase, divide by what we have. What we have is 105 after increase. Then we're gonna get amount below this one, because after increase must be before increase, it must be below after increase. We're gonna get 120,000. 120,000. So this is how we do a cash budget. So if you want to watch other full lesson, guys, besides joining our extra class, make sure that you join on our YouTube. We have a join option where you can be able to watch other full videos. I did other full videos, like a full question paper in one video that play more than 1 hour. So you just join anyone that you think that you can be able to afford. I think it's only R9.99 per month, and the other one is R19 per month. And also, don't forget to join our online extra classes so that you can learn other things. I'm gonna see you on the next one.